Welcome to the Real Estate Guys radio program. I'm your host, Robert Helms. The world is unsettled, but in many ways it seems like a lot of real estate markets are nearing the top. The big question is it too late? Is now a good time to invest in real estate, or should you hang on? We've got some thoughts and an amazing guest today on the Real Estate Guys radio program. Hear ye. Registration is now open for the Real Estate Guys 19th Annual Investor Summit. Imagine spending an entire week with like-minded investors, world-class educators, and real-world professionals. Returning this year are sales legend Tom Hopkins, the editor of the Gold Newsletter Brian London, international real estate developer Beth Clifford, and Jim Rohn's 18-year business partner Kyle Wilson. And joining us live and in person for his 9th Investor Summit, Peter Schiff. Plus, returning for his 9th Investor Summit, best-selling author and the Rich Dad advisor for real estate, Ken McElroy. Plus, lots more to be announced. It all begins June 11th in beautiful Belize. Visit realestateguysradio.com and click the tab that says Summit to reserve your spot. This transformational week is like no conference you've ever attended. Go to realestateguysradio.com and click Summit and make plans to spend a week with the Real Estate Guys, Peter Schiff, Ken McElroy, and an all-star faculty on the 19th Annual Investor Summit. Welcome to the Real Estate Guys radio program. I'm your host, Robert Helms. Joining me, as usual, it is our co-host and financial strategist, Russell Gray.
Hey, Robert.
You know, a lot of people are wondering what in the world is going on. And a question we get more often than not is, real estate's been good, the stock market's been good, things are going well, and all of a sudden there's all this change in the world. Is it too late to invest in real estate? Which is actually a really good question, because as we study real estate markets and market cycles, we know that markets follow patterns. Now, they aren't predictable and they aren't on the calendar, so you have to learn to see the clues and recognize where a market is, where it may be headed, and so forth. And there's so many nuances. We could spend 2 days on it. In fact, we do a 2-day due diligence class on exactly this market analysis, trying to figure it out. But big picture is anybody who's getting started in an investment. Maybe you've never bought precious metals. Maybe you've never been in the stock market. When you're getting started, you're kind of looking around and saying, well, it seems like we might be at or near the top. Is it too late?
Yeah, well, and I think one of the things, if you think about going like on a safari, you're going to go through the jungle, or you're going to go on some type of an adventure. It's always nice to go with a guide. If you're going to learn a new trade or a new business, it's nice to have a mentor. It's nice to have somebody that's been there and done that. And so for a lot of investors right now who have only been investing in real estate the last 10 years or so, 10, 12 years, which is quite a bit of time. And there's a lot of millennials out there in particular, but even other folks that later in life got involved in real estate investing post 2008. This is their first potential financial crisis. And they maybe don't know what they don't know, because I remember 2008 was my second. And even I didn't learn enough from the first one, because I really didn't understand the methods of how you learn through failure. I just brush it under the rug and you move on. Plus, when I watched what happened in the 1989 real estate crisis, I was watching from a distance. I wasn't in the space. I got into it later. I mean, I'd had a couple of properties, but it wasn't like being a serious investor. Today, there's a lot of serious investors. And so obviously one of the advantages we have, if anybody looks at us on the YouTube channel, is we have been around a while. And so we've seen a lot, and we hang around with people that have been around a while and seen a lot. And that's what you want to do. You want to talk to people that have been through the cycles, that recognize the little signs, not the big signs, because everybody recognizes the big signs. It's the little signs that presage the big signs that then presage what's actually going to happen. And so when you have that, because real estate moves slowly, you can get yourself in position to either take advantage of an opportunity or to mitigate risk. Portfolio adjustments, getting your credit, getting liquid, building the right relationships, studying the market, working on your education. The list goes on and on and on and on. But the key is talk to smart people.
Well, and you make a great point in that real estate does move slowly. It's not lightning fast. Certainly markets heat up and slow down, and there's particular types of property that become in favor, and then the return isn't as good. We call that cap rate compression. Don't let that term confuse you. It just means that the return stays constant and the price gets bid up, so there's less return for the investment. And so I think right now people are just nervous. They're nervous for a whole bunch of reasons, and yet arguably one of the reasons to invest in real estate is its stability. It's real, it's tangible. It has a proven economic model and long-term durable demand. And for those reasons, it can make a ton of sense, whether you're an investor that's just never pulled the trigger on real estate, or you're new into the whole earning income and trying to figure out how to preserve some game. Real estate is a great investment. But if I'm starting now, I can't help but thinking, am I at the top? Now, in many ways, some markets are at the highest they've been price-wise. But that doesn't necessarily mean that they don't have further to go. I remember you and I were speaking at the California Association of Realtors event years ago, Russ. We checked into the hotel across the street from the convention center, and there was a magazine in the hotel room that said, "Has your home's value peaked?" And you looked at me and you said, "Yes. Again."
Yeah.
Like it's peaked, just like it peaked last year and like it peaked the year before. So the part of that is, am I at the top? Well, I think the fundamental question is, how much does it matter?
Yeah, and I think that's really a great point. You know, you think about it, way back in the day, there was an assumption, and I look at everything from the financing side because the background that I came from, mortgage, and I'm just kind of a numbers guy. But there was this theory that higher interest rates meant property values went down. And so you may recall, I put together a giant spreadsheet and I went back and I looked at what interest rates were going back 25 years. And I showed that whether interest rates went up or down, real estate prices went up. And so that was one point on the curve. And so interest rates are interesting, but they're not the sole driver. Now, obviously, you talk about, home prices have peaked. Interest rates have hit their all-time low 11 times in 2020.
Right.
11 times. It's like every month we get a new low. So if somebody were to hand you a property right now, a home, free and clear, and somebody was living in it and paying you rent, and that's your gross income, and then you pay expenses, would you want to own that property?
Well, sure.
Well, then if the answer is sure, then the question isn't whether we've peaked in the real estate market. The question is it a good time to use leverage to acquire it? Because if you would own it free and clear, the question is would you want to own it with debt? And then you look at the interest rates and you're like, wow, these interest rates are really, really low. Now, that's only a point on the curve. But the threat is if interest rates go up, the price will crash. History says that's not true. That's like an urban myth. People believe it. But if you look at it, that's not really true. Now, if mortgages go completely away, pretty much like what they did in 2008, then yes, there will be a temporary dip in pricing and an opportunity to buy. But if you own the property for 20 years, what goes on in year 10 really doesn't matter all that much.
You know, Russ, you bring up a great point, which I think we haven't emphasized enough. Often when we're asked to speak somewhere, we use a couple of slides in our presentation that reference the Great Recession. And the first one shows that prices of properties got hit substantially in 2008, 2009. Big roller coaster dip. And then the follow-up slide shows rents during that same period of time. And rents did not do the same thing. Rents had a little bit of softness, hardly any, and then became pretty robust. But the part we haven't talked about is what you just said. A big reason prices went down wasn't because people didn't want real estate. Wasn't because people didn't need to live under a roof. It's because the mortgage market basically stopped.
Yeah. And it wasn't that interest rates went up. It was that people stopped lending. They became afraid of lending against real estate. Now, of course, the result of that was Dodd-Frank, and they completely re-regulated, in my opinion, over-regulated the mortgage industry. But at the end of the day, I think the Federal Reserve learned a lot of lessons. So even though 2021 is maybe potentially going to be a crisis in the financial system, we've talked for a long time on this show about how the health crisis turns into an economic crisis when you lock everything down and money stops flowing. And when money stops flowing, debt goes bad. And that puts pressure on credit markets and banks because the collateral that they're holding falls apart. And then you have foreclosures and all that stuff. But I think this time the evidence to me, and we've talked about this before, is that the Fed recognized that, and so did the U.S. government. And so they were immediately putting things in place to give businesses income so they could make payroll, so people could pay rent, so they could pay their mortgages. They were depositing money directly into people's accounts. And there's still more talk of doing more of that. And I think absent all of the political pandering and maneuvering going on through the election cycle, once it's settled, I think that money is going to be coming, because I think the Fed and the government has realized if we allow all this debt to go bad, it's far worse than just printing all the money and just handing it out like candy so people could make their payments. So I can't say for sure that's going to happen, but I'll tell you, I'm a little bit less concerned about a precipitous collapse of pricing, meaning I'm a little less optimistic that there will be a chance to go bargain hunting to the scale that we could go. But really, to me, it's like, okay, you got to pay attention to all these things, but trying to time the market is less important than underwriting a strong deal in such a way that you can control it for the long term. And then it doesn't matter what goes on the roller coaster ride. What matters is that when you get in, you fasten your seatbelt, and when you get out, the ride's not moving and, it's calm and you get out, right? What goes on in between is fun and interesting, but as long as you've kind of strapped yourself in with sustainable financing and a sound business model, good management team, and good underwriting on a market, you're probably going to enjoy the ride, and it's not going to be all that bad.
This is a hard thing for new real estate investors to understand, and I'm going to guess we have some seasoned folks that have a hard time getting their mind around this as well. But here's the thing. What a piece of property is worth on the open market only matters if you're buying or selling it, or possibly when you refinance it. The rest of the time, it does not matter. We've been talking up until now, when we're talking about is the market at the top in terms of pricing. But the other side of the coin is post-COVID, we've seen eviction moratoriums, meaning people that don't have jobs and can't pay their rent have not been forced to leave, but most owners of that property have been forced to make the payments. Now, there's forbearance programs and things, which we'll talk about a bit today. But overall, it means there's been an undue burden put on landlords. So the other side of the coin, the question is, well, are we going to see rents come back? Is that a problem long term? Now, we're happy to talk about these things, but we're thrilled to have a guest who has a huge perspective. He's our age, so he's been around as long as we have. He's the Rich Dad advisor for real estate and the author of several best-selling books, and we're going to pick his brain on where the market is and where it's going, and he's got a great resource to share with you that can help if you're new to real estate investing. When we come back, you'll meet Ken McElroy today on the Real Estate Guys radio program.
Real estate investment advice right in your mailbox. Sign up for the free Real Estate Guys newsletter at realestateguysradio.com.
Are you achieving everything you want in life? What if there was a time-tested way for you to get everything you've dreamed of? The most successful people in life set goals and keep themselves accountable. But how? The good news is that it's not rocket science. You too can learn the skills and unleash the motivation that will create success in your life. And now is the time. Hi, this is Robert Helms, and I'd like to personally invite you to attend Create Your Future, the 2021 Goals Retreat, January 8th to 10th in beautiful Lake Las Vegas, Nevada. This unique weekend event has been called phenomenal, inspirational, and life-changing by the thousands of people that have attended. Hear from some of them and find out more at realestateguysradio.com under events, or call 888-489-7723, extension 18. Get your life back on track, physically, spiritually, and financially. Attend the live in-person 2021 Goals Retreat on the second weekend of the new year. Click Events at realestateguysradio.com to register. This is no dress rehearsal. Live the life you were meant to. Visit realestateguysradio.com or call 888-489-7723, extension 18 today.
Hi, this is Brad Sunrock, and over the past 19 years, I've helped thousands of people invest profitably in multifamily real estate. You see, I help people invest in large apartment buildings, both as active syndicators or passive investors. And in today's competitive and changing environment, it's even more important than ever to leverage an experienced mentor, invest in yourself and your ongoing education, and have a team of professional advisors that has nationwide relationships. And with the pandemic, it's even more critical now than ever before that investors understand where and how and what to invest in and what to avoid so that they can be successful.
Learn how you can invest in apartments and get ready for the upcoming buying opportunity. Join Brad Sumrock on November 14th and 15th in person in Dallas, Texas, or via live stream from anywhere. Send an email to apartmentmastery@realestateguysradio.com for all the details. Find out where the real opportunities are in multifamily real estate now. Just send an email to apartmentmastery@realestateguysradio.com.
Hi, this is Steve Forbes. You're listening to The Real Estate Guys. Have fun. You'll learn something.
Welcome back to the Real Estate Guys radio program, heard every weekend on this great radio station and all the time at realestateguysradio.com. We've got a great guest for you today. He is a real estate guy through and through. In fact, his brand new book, The ABCs of Buying Rental Property, has just come out. Please welcome the Rich Dad Advisor for Real Estate, our friend Ken McElroy. Hey, Kenny.
Hey, guys. What's going on?
It's good to see you. It's good to see that you're back and working, although I will say you took some time, quote unquote, off during COVID and probably put out 3 or 4 dozen videos. It's been amazing watching your great content.
Thank you. Yeah, it's been, here's the cool part. As you guys know, like, we're real estate guys first, and we're doing deals and, closing loans and raising capital and doing due diligence and managing people and all the things that come with that. It's busy, full time. And so when COVID hit, obviously, everything kind of halted. I'm like, you know what, I'm going to, everybody's been saying do this YouTube stuff and go on social media and do all that. And I honestly just didn't have the time. I would rather be doing deals. So it's been a blessing to see, they do well. And it's been really fun. I've gotten just incredible response. And the best part is that people say, hey, could you talk about this? Could you talk about that? And so it's been great to hear from people really what they want, and then to try to deliver that to them so that everyone can learn together. So it's been awesome.
Well, one of the things we love about you is that you're a teacher and you really can't help yourself. Yeah, we're all doing deals and we're all active in the business, but at the same time, there's such great lessons that you learn. And, there's a lot of people that they're successful, but they keep those lessons to themselves. We were talking about this a bit a couple of weeks ago, so it's great to be able to hear you share those ideas. You're kind enough to often share at our events and things, but let's kind of talk big picture right now. Last time we had you on, it was just kind of COVID had just taken us by surprise. We were talking about the, communicating with tenants and how important that was and kind of navigating through uncharted waters. Now we're more than half a year through. So share with us some of the things that you're experiencing with your portfolio and some of the direction that you see real estate markets headed.
Well, for our portfolio specifically, I've just been super impressed with my team. You don't really know what a team can do until they're asked to do it. And they responded incredibly, especially our maintenance crew. And you think about, we got probably 75, maybe 100 maintenance guys, and all the PPE, and the COVID, we have employees with COVID, we have residents with COVID, and there's all this stuff. We had to shut down our offices. We had to learn how to collect rent and show units. All those things all happened in the first couple of months. And then obviously we have investors that want returns. And so, all of that stuff, what it did was it really test our whole organization, and which in a good way. And so there were lots of things that we did. The first thing that we did was I eliminated all capital projects and all renovation projects. And that saved millions and millions and millions of dollars in the short term. I eliminated all marketing immediately, and that saved $4 million. And so now I'm talking about, on all our projects. So ironically, we got hit pretty good on the income. As you would imagine, people can't pay and they move, and we got people on payment plans, and some can make it and some can't, and some just pay. But so our income's definitely down, like most real estate folks.
Yep.
But so is our expenses.
Sure.
So when you put the two together, we actually fared okay. And so we're pretty proud of being able to, immediately grind through every single line item on the expense side and see what's necessary, what do we need, what don't we need, because we knew that was coming. But we have successfully figured out how to rent places, how to collect rent online, and be safe and keep everyone safe. So I'm very happy. I met with my whole team every week for 90 minutes and through the whole thing, and got full updates. And of course, there was a number of emails and texts and things all in between all of that. So it was, believe it or not, I was gone, But I went to Idaho because it was a little more free there. I could go to the gym and there was no masks required at the gym because Idaho hadn't passed that at that time. And so that's why I went there. And of course I have a home there. But I did all that from there and just made work a priority. So it was really exciting to see the operations respond, and we did okay.
Well, now, of course, we've just heard that the third quarter numbers, we've seen unemployment go down, but employment rise. We're seeing more jobs. People are coming back to work. Not that we're in the clear, not that everything's back to normal, but there has been folks who were out of work coming back to work, businesses that were closed with no income reopening, at least to some degree. So I'm going to guess that in the coming months, we might see a little bit of reversal. Are you starting to see that anywhere? It's starting to pick up.
Well, thank you for the big softball you just gave me, because I did a video on unemployment, actually, that's going to be coming out on YouTube, on my YouTube channel, Ken McElroy, about this exact issue. And so I know Russ is all over this issue, but what I realized and learned is that there's 6 levels of unemployment. There's U1, U2, U3, 4, 5, and 6. And what's reported is U3. And so U3 is the number that they've been using. That's the official unemployment rate, which right now is 7.5%, I think, and it's 2.6 million people. But the real number, U6, is actually the number that includes everyone. And that's closer to 20 million people. It's actually 20.4 million people. And so from my standpoint, I cannot wait to see, what's going to happen next. A lot of, the big recovery that we've seen, in my opinion, has just been people going back to the jobs that they were already in before, not necessarily new jobs. And so I'm still very concerned about those numbers. And I think people should look at the U6 numbers, because the way the unemployment numbers work is that if people are discouraged and not looking, they drop off. If they're full-time and go to part-time, they drop off. If they stop getting unemployment benefits, they drop off. So that's all. If you just go to www.bls, the Bureau of Labor.gov, you'll see it's all on there. It's all public. It's on the government website. So I'm still a little concerned, quite honestly, about, unemployment and where we are, and especially it doesn't look like there's a lot of businesses, I think, that we're still hanging on. They got some PPP money. They're kind of gently opening. And, there's a lot of folks that are probably burning through savings, trying not to lose their business. And those are real people with real employees trying to salvage their living. And so I think it's going to be a pretty rough next 18 to 24 months.
Now, last time around, and we've talked about this before, we watched you guys pick up some great properties, maybe earlier than some, but later than others. So you didn't try to catch a falling knife, but you were very diligent about waiting for the right deals. And then all of a sudden the market got heated, cap rates are compressed. The next thing you know, there's 5 different groups at best and final. Now you've just experienced what we all have with COVID. What's your strategy for the next couple of years?
Yeah, thank you. Yeah, well, so guys, I mean, it's not doom and gloom. You just got to pay attention to that stuff. We were in a massive bidding war last week on a couple deals. We've got 5 deals that we're going to build. There's still a rental shortage, period. There was one before COVID. If you go to National Multi-Housing Council, there's an incredible study, the nmhc.org. There's an incredible study that shows that we're undersupplied through 2030.
Wow.
On rental houses. And it was that way already, but you got to be careful. If you definitely can buy something and it can definitely go down. But you can also buy something and it can definitely go up. And, you just want to buy, you need to be very, very careful. This is where all the education and experience come in, guys. Like, you want to go to where people are moving to. And you want to be in those areas. Obviously, it's going to put pressure on an area, and increased supply is going to put pressure on an area, and housing prices are going to go up, and rents are going to go up, and vacancy is going to go down, and all that stuff's going to happen as people migrate around. So there's still a lot of opportunity, and we have massive plans for growth, primarily through new construction, because we've seen prices jump to or even higher than it would cost to build something. So that's been our strategy as of late, and we got close to 250 million in the pipeline right now.
Awesome. So I love the fact that you're being cautious, but still, when a good deal comes, a good deal comes. You know, we had you on our Tax Talk program on our YouTube channel, and we were talking about the fact that different states have different taxation, and that's a reason you consider places. But it's the same with tenant landlord law. It's the same with what jobs are recovering, what areas are recovering. And so you do have to pay attention. I know you've been in a few core markets. Are you looking any further than that right now?
Yeah, we've been pretty cautious around some of the core because, again, it goes back to employment. The thing that I think a lot of times we forget is that real estate exists for people,
Right?
Not the other way around. Like if there's no people, buying a Starbucks or going to lunch or going to dinner and buying a bottle of wine or going to a theater show or going to the casino or grocery or whatever it is, and there's none of that going on, then, that area is going to get depressed and it's going to be a bit of a problem. So I'm a massive believer, especially now. If Biden gets in, he's going to give a bunch of money to people that need it, and they're going to use it in the form of rent and all these kinds of things, and that's going to help the landlord. Period. And if Trump stays in, then of course we're going to continue to get these tax cuts and incentives through the opportunity zones and stuff like that. So either way, I think it's good for a landlord, and real estate investors over the long haul. We definitely need housing, guys, especially with this mortgage forbearance issues that we have. We got somewhere between 3 and 4 million people that can't pay their loans, and I think through this CARES Act. But the bigger issue is going to be when that ends. Like what are they going to do? Because they have to refinance or do a loan mod. And guess what they have to do? It's almost like a new loan. They have to reapply, and they have to, they're going to look at their income. They're going to look at their credit score. They're going to look at all that stuff. And the credit score, it's not supposed to be affected, but the lack of reporting could affect the credit score. So it's going to be interesting.
Well, yeah, and there's so much to pay attention to here, right? Eviction moratoriums, which are still on in several places, and what's it going to look like when all that stuff gets flushed out. So I guess one of the specific questions that people often have, and it's in the weeds, but you're a guy that knows this stuff, has to do with your underwriting. When you underwrite a deal, and you're typically going to have vacancy factor, you're typically going to look at the competition, the competitive set, durability of the rents in the area. But what about now? All of a sudden, the world's changed. How has your underwriting been affected by this?
Well, I'll tell you something that was funny. As we're doing these deals and we're looking at, existing deals and ground up construction, we're getting all these quotes from lenders, as you would imagine. And we get these term sheets, and they have their underwriting. Obviously, you guys know how that works. You give them the deal and they value it, and then they say, okay, we'll give you so much. Well, they have now a new line item. You're going to love this, guys. It's called COVID reserve.
Nice.
It's literally called COVID reserve.
That makes me sick.
Oh, nice. Everyone is concerned about COVID. And, the lenders, of course, are concerned. Investors, of course, are concerned. I'm concerned. We don't know what's coming. And yes, we have this massive eviction issue, I think. We have a fairly large number of people that can't pay their rent. And we have a fairly large number of people that are burning through their savings. And we have a fairly large number of people that are not going to be able to come up with that lump sum payment on their mortgage if they have to pay that. And so I think all of that is going to hit next year, depending on the administration, that comes in and what they do. That could prop it up a little bit more. But essentially, the government's just funding people to live at the moment. And I don't really think we've seen anything yet. We're just trying to figure out what's going to happen. So you got to be very careful. We're taking all that in consideration. The biggest thing we look at is where. So if it's heavy airlines or cruise ships or, tourism, or, you should be very, very, very careful. You saw Disney just laid off 28,000 people. Those are real people with real car payments, with real rent, with real mortgage payments, with real childcare payments, with, they go to lunch, they go to breakfast, they go to dinner, they buy food, and all that stuff ripples through. And we've seen this on industry after industry after industry. So you just got to be very careful and try to pick an area that is the least affected, and it's going to be okay, like healthcare as an example, or tech as an example, although tech could be dicey. But those kinds of things, I think you got to look at industry and and really take a look at that and say, what's gonna weather through this, and start there, because you need jobs in order to pay for things.
Our guest today is Ken McElroy. He's the author of the ABCs of Real Estate Investing, the ABCs of Property Management, and a brand new ABCs book. We're going to talk about that and give you a chance to win a copy on Real Estate Trivia next. You're tuned to the Real Estate Guys radio program. I'm your host, Robert Helms.
Need help with your real estate investment portfolio? Check out the resources page at realestateguysradio.com.
If you love real estate and have always wanted to own your own business, listen up. The Real Estate Guys and their panel of experts want to teach you how to go full-time fast in the real estate syndication business. These next few years may go down in history as one of the best times ever to acquire investment real estate. There are deals everywhere if you know where to look and how to assemble the resources. The Secrets of Successful Syndication seminar will show you how to make big money doing big deals from a team of experts that have syndicated projects totaling more than $1 billion. Don't wait for someone to give you a raise or create a job for you. Attend the Secrets of Successful Syndication and learn how to build a team, raise capital, find deals, and make full-time money in 6 months or less. Go to realestateguysradio.com and click on events. All the big players use syndication as a way to diversify risk, optimize profits, and earn big money. You can too. Go to realestateguysradio.com and click on events.
In uncertain times like this, it's great to know there are two things you can always count on: high demand for affordable single-family homes to live in, and Terry Kerr's amazing Memphis team at Mid-South Home Buyers to find, fix, and manage the next addition to your recession-resistant real estate portfolio. The Memphis market is a logistics and distribution dynamo with an economic engine that's essential to moving goods and critical supplies all over the United States. Quality rehab, proven profitable property management, affordable rents, and solid ROI make turnkey property investing through Terry's team a dream when it matters most. To learn more about Memphis and Mid-South Home Buyers, send an email to midsouth@realestateguysradio.com. That's midsouth@realestateguysradio.com.
Hi, this is Mark Skousen, and you're listening to The Real Estate Guys.
Welcome back to the Real Estate Guys radio program. Thanks for tuning into the show. If you lack clarity in your life and want to be a better parent, better provider, better employee, better employer, better person, come on out to Create Your Future. The 2021 Goals Retreat takes place the 8th through 10th of January in Lake Las Vegas, Nevada. All the details on our website at realestateguysradio.com under events. We're talking today about getting into real estate. Is it too late? Is there opportunity? We've got Ken McElroy with us, and he's got a brand new book out we're going to give away a copy of as we play Real Estate Trivia. That's your chance to be the first to answer today's Real Estate Trivia question. As soon as you're the question and think you may know the answer, send your best guess to trivia@realestateguysradio.com. Trivia@realestateguysradio.com. Include your name, your guess, and your mailing address. Because if you're the winner, we're going to send you an autographed copy of Kenny's brand new book, The ABCs of Buying Rental Property. But before we give you this week's question, last week on The Real Estate Guys, we were talking with George Gammon about macroeconomics and asked this: Colombia is the world's leading producer of which precious stone? Well, the answer is the emerald. Yeah, Colombia produces more emeralds than any other country. By the way, Russia produces the most diamonds, Myanmar the most rubies, and Madagascar the most sapphires, although Sri Lanka continues to be the only steady producer of fine quality blue sapphire. Here's our real estate trivia question for this week. With the U.S. election in the rearview mirror, Kind of. Here's our question. There are 538 electors in the U.S. Electoral College. They represent the 50 states plus the District of Columbia. All jurisdictions use a winner-take-all method with the exception of 2 states. Which ones? In which 2 U.S. states can there be split Electoral College votes? If you know, or you've been paying attention, or you just want to guess, send your best guess to trivia@realestateguysradio.com. trivia@realestateguysradio.com. First person with the right answer gets an autographed copy of the brand new book, The ABCs of Buying Rental Property. That's today's real estate trivia question. We're with the author of that amazing book. It's called The ABCs of Buying Rental Property, How You Can Achieve Financial Freedom in 5 Years. Ken McElroy, I know you had a lot of time over COVID, but tell us really the reason you wrote this, because you started talking to us about this book coming out long before there was a coronavirus.
Yeah, thank you. When I first wrote my first book, as you guys know, I was already kind of past the buying of the single family stuff, and I was already buying some multifamilies. The book, my ABCs of Real Estate Investing book, was really an 8-unit building that was in Phoenix, and it just kind of walked people through it. It's more of a multi-unit book. And so the one thing that people kept asking for the whole time was, this is great, but how do I get started? And so I kind of had to go back and look at some old stuff and kind of uncover in the archives all the things that I used to do back then. And then I went and I found some folks that are, doing it right now. And I put all that into this book. What would a guy that, owns $1 billion worth of real estate do if he was to start now? And so I've tried to bring some of the lessons back and put that in the book. These are the things that I would do if I was going to get started today. And so that book really is a starter book for people that don't even have a rental unit, or if they do, there's some other stuff in there on tax and legal and things like that. So it's really more of a starter book that kind of gets people to, out of the mindset of, I don't make a lot of money and I don't have a lot of time. And so I knew that those were going to be the 2 things that people bring up the most, because that's what I hear the most. And I addressed those. And then I had a wonderful experience as I was writing the book, and that is a friend of mine who was helping me ghostwrite it actually ended up buying and doing some of the things that I asked him to do while we were writing the book, and went from basically being retired to an active landlord with lots of cash flow. And so that's in there as well. So I'm really, really happy with it. I think it turned out great, and hopefully it does really well. I think it's a great book for the series.
Well, and I think, we have a lot of folks who listen who are just getting attracted to real estate, or maybe they have a rental property. And so this is a great, great book. Not that the rest of Kenny's books aren't books you're going to want to read. You are. But if you're starting out, this is definitely the way to go. It's called ABCs of Buying Rental Property. Just came out last month. So congratulations on yet another book.
Thank you.
We, of course, had you on the show when your last book came out, which was a departure for sure.
Yeah.
Which was a story, amazing story. Return to Orchard Canyon. What's next? What's on your heart to talk about next? Is there another book you want to talk about, or something that you're thinking about?
I'm actually writing a book now. I'm almost done. I'm actually done with it. It's called The ABCs of Raising Capital. And I want to send it to you guys because you do all your syndication. I'm not quite ready to do that, but I'd love to get your feedback on it. But I think a lot of times, it's more geared toward the person that is starting. Because I think that's oftentimes, as you guys know, one of the big obstacles for people is, I don't have the money. How am I going to get the money? And then you guys have some really good programs around that on syndication, but they're really geared toward more of the bigger deals. And so this one is more organically. This is more, how do I just find the money to do stuff, whatever that might be, and just start. And so that's what the next book's going to be. Are some of the things that they could do, and maybe things that they didn't know about, and just maybe open their mind and give them some ideas on ways that they could attract capital to do what it is that they want to do.
Awesome. Love that. Our mutual friend Robert Kiyosaki says only lazy people use their own money. So that's why we're big fans of syndication. We love when you come out and share on that. In fact, coming up, And 2021 is the 19th annual Investor Summit. The first time we're going to do it in the 19 years, not on a cruise ship, but we're thrilled that you're going to be with us.
Yeah, I can't wait. I've been on a bunch of your cruises, you guys, and it's been mostly around my schedule, and you guys have accommodated that very well over the years, and thank you. I think the best part for me is the people that go, because they're like-minded. These are people that are trying to make a difference in their own lives and their family lives. And so just being able to hang out and hear the stories of things that they're doing individually, and some of them are super inspiring. Some of these people came from, really bad situations, and they're making massive headway for themselves and for others. And a lot of them are educators. So I really enjoy the folks. I really enjoy talking to the people, and obviously the content and the speakers you guys bring in is always great. And then who doesn't want to be in Belize? I mean, it's just spectacular there. So if you can figure out a way to go, this is a great opportunity to go spend some time on an incredible place, incredible environment with incredible people.
Awesome. Well, hey, Ken, we don't know what the future is going to look like. That's part of the reason we get together once a year at the summit and get the biggest brains and the smartest people we know, like yourself, to be talking to each other about this, because that's another big part of it. But since, the new book is really aimed at that person starting out, what are a couple things that you would say to somebody who is just thinking, is it the wrong time to get in real estate, or how do I get into real estate? What are some of those distinctions that you've learned over all your years of being a real estate investor?
Yeah, well, I think honestly, there's any day of any year is the wrong time to get into real estate.
Yeah,
I really believe that. I mean, you can make a lot of mistakes. It doesn't matter if the market's going up, the market's going down. Yes. So the answer is yes. It absolutely, positively can be the wrong time to get into real estate. Can it be the right time? Absolutely, yes, too. And again, it's, real estate, what I love about it is you could literally go a block away and things can be booming. I mean, we've all seen it. You go to your hometown, there's areas that are growing and areas that are imploding. It's just the way it is. And so there's always money to be made in real estate. At the moment, obviously we're seeing malls get annihilated. Nobody's going to be going to malls, and Amazon and all the direct to consumer stuff's killing. The hotels are getting annihilated. Okay, well, 10 years ago, the malls were the thing. And, the hotels were, right before COVID, were doing really, really well. Now they're not. So industrial is doing really, really well because of, Amazon and all the goods and services as they're trying to deliver the same day. So, real estate is super cool. I think there's just, there's so many really, really neat things about it. And if you just study it enough, whether it's billboards or cell phone towers or self-storage or industrial or office or, a warehouse, it doesn't matter. There are massive opportunities everywhere at all times.
Yeah.
Things are happening and there's movements being made. When a military base moves in or out, that's a massive real estate play. When an amusement park moves in or out, that's a massive real estate play. When there's a stadium being built, that's a real estate play. There's so much that, happens in spite of whether the economy is going up or down or how doom and gloom it is, especially with the media. That's what I like about it. It's not a national issue. You can have areas that are just going crazy and areas that are just going down, like Detroit, has been on this long slide for a long time, and some of the areas in the Midwest. But other areas have been on this big, increase. And same market, same national market, same time frame. So I think that there's always opportunity everywhere.
Love that. And isn't it true? All right, there's Ken McElroy. His new book is called ABCs of Buying Rental Property, How You Can Achieve Financial Freedom in 5 Years. Always great to catch up with you, my friend. Thanks, Kenny.
Sure, guys. Great chatting with you, as always.
You're tuned to the Real Estate Guys radio program. I'm your host, Robert Helms.
Live nationwide, you're listening to the Real Estate Guys. Find out more at realestateguysradio.com.
When the world changes, investing strategy changes too. The coronavirus is disrupting economies, financial systems, and daily life like nothing in modern history. Sheltering in place might protect you from the virus, but a wait-and-see approach to investing now is like pulling the sheets over your head while the house burns down. It's not the time to be complacent. So we're calling our huge network of thought leaders, seasoned investors, and technical experts to find out what they're seeing, thinking, and doing to mitigate risk and capture opportunity, and we're recording all of it. We're calling it our Coronavirus Crisis Investing Webinar, and it's totally free. All you need to do is register. Remember, mainstream media doesn't talk to real estate investors. They don't understand you because Wall Street pays them not to. That's why the real estate guys are here. To register for the Crisis Investing Webinar, simply send an email to crisis@realestateguysradio.com. That's crisis@realestateguysradio.com. Real world wisdom is the best vaccine for a healthy financial future. Send your email to crisis@realestateguysradio.com.
Don't be like Charlie, who scans the internet for IRA information, often getting bad information from copycats who have no idea what they're doing. You deserve to work with a reputable firm that specializes in one thing, the EQRP. Lucky for you, Congress just made it possible for you to get up to $200,000 out of your current 401k or TSP, so you can invest that money in real estate or even your own business. Even if you're still working, it's possible to get access to all this money tax-free. Whether you're a full-time investor, a doctor, or a government employee, even if you have employees, the EQRP is your secret weapon. You'll never see this strategy in Money Magazine, only here with the Real Estate Guys. Every major accounting firm in America is quietly sharing this strategy with their wealthy clients, helping them get their funds freed from 401k jail. Hi, I'm Damian Lupo, and we have your solution. With the CARES Act expiring soon, this strategy will be gone forever. The EQRP company is ready to help you unleash your retirement funds now. Want to learn more about this strategy? Send an email to eqrp@realestateguysradio.com for my special EQRP report today.
Hi, this is Kevin Harrington, an original shark from the hit TV show Shark Tank, and you're listening to The Real Estate Guys.
Welcome back to the Real Estate Guys radio program. Thanks so much for tuning into the show. Hey, come out and hang with the Real Estate Guys live. We're going to be in Lake Las Vegas, Nevada in January for our annual goals retreat. It's called Create Your Future. We're also going to be in Dallas, Texas in late March for the secrets of successful syndication. You can learn how to do bigger deals or how to invest passively with folks who are putting those kinds of deals together. You can get all the information on our website at realestateguysradio.com under events. Well, my goodness, always awesome to spend time with Kenny McElroy.
Yeah, Kenny's a smart guy, hanging around with Robert Kiyosaki for all those years, and I'm sure Kenny was already like this, but he just has a way of taking complex things and making them simple. The other thing I love about him is he's curious, always learning. We have had some epic off-mic conversations that are just a lot of fun about him trying to understand things, and we're all constantly being students. But Kenny's been in this game a very, very long time. And more than that, he's been a teacher and an author for a very, very long time. And, having done some of that, right, you and I have learned, although not to the scale he has, when you teach, when you write, it really helps clarify your thinking. It really helps make you smarter. It's one of the great reasons why anybody out there who knows anything really ought to invest in sharing their knowledge with other people, because in your enlightened self-interest, you will become smarter. And so Kenny's a smart guy. And the thing that I hear is he's level-headed. He's not panicked, and Sam Zell talked about this in his book, Am I Being Too Subtle? The ability to look at the upside, but also to be able to see the downside and then to figure out a path to navigate through. Jim Collins talks about confronting the brutal facts, but with optimism, with confidence in your team and your ability to make on-the-fly decisions. And again, the major concept that everybody needs to understand is when you listen to talking heads, financial media people, these macro pundits, they're only ever talking about real estate, maybe in terms of housing at the macro level. And the numbers, when they put them in a blender, don't matter, right? It doesn't matter what the national vacancy rate is. It doesn't matter what the national foreclosure rate is. It doesn't matter what the national anything is, because you're not buying the nation. You're not buying a nation index fund. You are buying an individual property in an individual neighborhood, in an individual set of circumstances with your own financial package that you're going to put together and your team. And if you know what you're doing in your underwriting and your management and your financial strategy, then it's possible to get a deal that makes sense in any market. And when people are scared, as Warren Buffett says, be greedy when other people are fearful, and fearful when other people are greedy. The difference is, as I think Kenny noted, is that real estate moves slowly. So you don't have to run in right away just because you can see the train wreck coming. It's a slow motion train wreck, but there's going to be a lot of chests of gold that are going to kind of fall out of this train wreck, right? Because when the train wrecks, there's going to be opportunity everywhere for those of us that are paying attention and can scoop them up. So I think that Kenny brings that perspective. Every time I hear him, he balances me out. He takes me out of greed and he takes me out of fear, and he puts me in the straddle position where I can see both sides of the coin.
You know, there's what people say, and then there's what people do. And watching Kenny and Ross, they definitely took their foot off the gas a little bit in 2007, 2008, even 2006. And then in the thick of the downward spiraling out of control market where everyone was freaking out, they were buying like crazy. They deployed $300 million between 2009 and 2012. And people thought they were crazy, but they could see the workings. They understood the game. And one of the challenges people have with Ken sometimes is because his deals are so big. His average deal might be 300 or 400 units and $20 or $30 million. We've had Ken speak at many of our events, and sometimes beginners especially just have a hard time getting their mind around that. But being in the rich dad camp, Kenny's been forced really to be able to make it understandable. And when we're at one of our events and we ask, all right, who's read the ABCs of real estate investing? It's 80 to 90 to 95% of the hands. I mean, it's just a standard real estate book that people are going to read. But to Ken's point, the illustration he uses for most of it is an 8-unit apartment building. The new book, he really went back and said, you know, I need to revisit before I was Ken McElroy. And I remember in 2012, we had a panel on our investor summit. And on the panel were Ken McElroy and Kim Kiyosaki and my dad, Bob Helms. And then we had Tom Wheelwright, who talked about the tax side. But the thing that Ken and Kim and my dad and I all had in common, our very first property was a 2-bedroom, 1-bathroom. Kim bought a 2-bedroom, 1-bathroom. Kenny bought a 2-bedroom, 1-bathroom. Same with my dad. I bought a duplex, and each side had 2 bedrooms and 1 bathroom, so I was kind of an overachiever. But the point is, you start small. You don't necessarily have to start with the Taj Mahal. At the same time, our friend Brad Sumrock's first investment property was a 32-unit apartment building. So the point of that is there is no one-size-fits-all. If you're brand new to real estate investing and you're wondering, is it too late to get in? Well, I think Ken pointed out that 1, there's no hurry to get in, but 2, he said his specific quote is, there is always opportunity everywhere. And as he mentioned, they're actively looking at a bunch of deals right now, which surprised him as much as anybody else. So the point is, when's the best time to buy real estate? 20 years ago. When's the second best time? That would be today. You can be strategic, you can take time to get educated, and it doesn't all have to happen before the end of the year.
Yeah, well, that's absolutely the point, because, you know, if you ask yourself, if you could go into the future 20 years and ask yourself, what should you have done 20 years ago? The answer is probably going to be the same answer if you ask yourself, what should I have done 20 years ago today? Very few people don't look back and go, oh, I wish I didn't own more real estate. Most people, I wish I did own more real estate. Well, how do you make that happen? You buy. You have to be out there. You have to be in the game. And that's the key. And to your point, Robert, you can start small or start wherever you are, which I think is a better way of saying it. Start wherever you are. In Brad's case, he had mentors who helped him go bigger, faster. And there's a lot of different ways to approach it. But the point is, get in the game. Don't use what's going on in the economy as an excuse to not get in the game. Get in the game. And then it's better to be prepared and not have opportunity than to have opportunity and not be prepared.
Now, one of our favorite things with the Real Estate Guys is to help people collapse time frames, something that took us 10 years to figure out. If we can show you how to do that in 2, more sooner is better. A great way to do that would be to join us and Ken McElroy on the 19th Annual Investor Summit. It's going to be extraordinary. And I tell you what, Ken is up early. He stays up late. He hangs out. He holds court. He has conversations. And you heard him talk about his favorite thing is the people. Not just that he's sitting there prognosticating. He does some of that, but he's a student. He attends virtually every class. He gets in the conversation, wants to know what's going on with other folks. And it's coming up in June of 2021. We're super excited about the summit.
Yeah, the summit's going to be great because it's 7, 8, 9 days, whatever it is a long time. We're all together and you're meeting investors from all over the place that have different perspectives, that have different starting points, that have different achievements, different markets, different product types, different niches. They ask smart questions, panels where you get people talking together that you would never get a chance to hear talking to each other. And we bring in all kinds of big name speakers. And it's not that their names are big, it's their brains are big and their experience resume is solid. And then we let them talk to each other. And they all understand the name of the game, which is being available, being accessible. So if you've ever gone to one of these big conferences where there's 1,000 people, or you've watched somebody on YouTube or seen something, or there's millions of views or hundreds of thousands of views, and you say, I'd love to ask a question. You put something in the comments and nobody responds, or you send an email or fill out a contact form and nobody responds. We know because we have that happen to us all the time. You can't possibly respond to everybody. But if you really want to get in those conversations, you have to be in the room where those people are when they are making themselves available. And that's what happens every year for the last 18 years. This will be our 19th. Is that right, Robert? 19th?
That's right.
Annual Investor Summit.
19 years. The 18th was the summit on screen. The cruise ship pulled the rug out from under us, and so did the hotel. So we decided to hunker down, and we had 3 full days with the faculty, which was awesome. But we've decided not to tempt fate, and for the first year in all these years, we're not going to be in a cruise ship. We're going to be at a beautiful resort. We have the entire resort to ourselves, meaning everybody there will be part of the summit. It's the perfect size for that. One of the challenges, though, is it's just a little smaller than the room we normally have available, and we're more than 70% sold out already. That's not to scare you, but it is to have you consider signing up sooner rather than later to make sure you get a seat. The other thing is that we only have limited numbers of different styles and types of hotel accommodation. So if that part matters to you, then you're going to want to get over to the website right away and check it out. Or actually, easiest thing, just send an email to summit@realestateguysradio.com. It's on our site under Investor Summit, but if you send an email to summit@realestateguysradio.com, you'll get all the details and you'll be able to join the Real Estate Guys and Ken McElroy. Big thanks to Kenny for sharing his wisdom, his experience, and his thoughts with us today. We've got a great show for you next week, and coming up soon, it's Ask the Guys. That's your questions, our answers. If you have a question for the Real Estate Guys, just go to the website at realestateguysradio.com and click the button that says Ask the Guys. Until next week, go out and make some equity happen.
This episode of the Real Estate Guys radio show is brought to you by Paradigm Life. Powerful cash management strategies using life insurance. Learn more at beyourbank.com. Mid-South Home Buyers. Low-cost, turnkey cash flow properties in Memphis, Tennessee. Corporate Direct. Asset protection strategies for real estate investors. From attorney and Rich Dad advisor Garrett Sutton. Find these and other great companies under the Resources tab at realestateguysradio.com. To learn how you can expose your product or service to the Real Estate Guys audience, call 888-489-7723 extension 4. That's 888-489-7723 extension 4. Or use the feedback page at realestateguysradio.com. Thanks for listening, and we'll see you next week right here on the Real Estate Guys Radio Show.